The watch market is untouchable. Don't believe us? Take a look at what has been going on around the world. None of the instability caused by the crisis in Ukraine, China's strict lockdowns, inflation, falling stock markets, or crashing cryptocurrencies has affected the export of watches. There was a nearly 13% growth in their worth from January and May of this year compared to 2021, which was a record-breaking year for the sector overall. It has been a few bumps here and there, all right, but it has been a successful run so far. But Swiss watchmakers are getting nervous by the minute. Why? As it turns out, nothing is as it seems. Sales records have been announced by companies throughout the whole price spectrum. Growth is driving expansion efforts like CD Peacock's $20 million plus building project, which is a solid sign that the good times are here to stay. However, there are warning indications that show 2023 could not be altogether trouble-free. The luxury watch sector is now seeing on average price tags of more than $7,000 per piece. And this is driving the new trend of, should we say, uncertainty. As of last year, such luxury watches accounted for roughly 75% of the total value of Swiss watch exports. Now, according to statistics published by the Federation of the Swiss Watch Industry, the total number of watches shipped has stayed relatively constant since the beginning of the year, going up by 2.3%. And we have to admit, this global obsession with expensive timepieces is new. Even many watch consultants are surprised. But here's something interesting. The hottest modern timepieces, including the Rolex Daytona, Patek Philippe Nautilus, and Audemars Piguet Royal Oak, have seen their resale prices drop by as much as 50% since their January highs. The market slump that started in April has scared off some investors. Now we're being presented with humanity's worst enemy, uncertainty. You see, when prices for Patek, Rolex, and Audemars classics drop to more realistic levels in the secondary market, it's a sign that the primary market is beginning to cool off. So what do you think? Good or bad? However, it's safe to say that things are not going as usual. The microeconomic aspect is fraught with uncertainty. The rate of interest is rising. President Biden still avoids the subject of the economic downturn. There isn't a lot to be excited about here, but there aren't any red flags either. So it feels like we're being pulled in separate directions. Such reluctance is typical among seasoned watch business watchers. No one in March of 2020 could have foreseen that the epidemic would usher in a time of exponential expansion. According to the Federation of the Swiss Watch Industry's year-end report for 2021, Swiss watch exports peaked that year at 23.3 billion Swiss francs, or roughly $23 billion, a 2.7% increase over 2019. And as we've seen, it has been way better this year. So, to the big puzzle, why are Swiss watchmakers so nervous? The experts agree that investors loaded with stimulus cash and crypto wealth are mostly responsible for fueling most of the frenzy over the previous 2 years. They helped whip the market into a craze by routinely paying 3, 4, or even 5 times the retail value on secondary channels for scarce models until the crypto collapse in May interrupted the purchasing spree. Maximilian Bossa, founder and creative director of MB&F, a boutique watch brand that saw its business boom during the pandemic, stated on a phone call, "All the speculators are running for cover. For many years before the advent of the pandemic, they consistently sold 90% to 115% of our output. Watch brands like Mr. Bussard's pretty much had to investigate every customer to determine if they were a genuine watch enthusiast or someone just looking to make a quick buck off of their purchase. Today, things are a bit different and, well, simpler. The percentage of customers who are going into stores in search of profitable business opportunities is falling daily, which is great news for the majority of watch manufacturers. More than the conflict in Ukraine, rising interest rates, double-digit inflation, and the looming threat of a recession, the polarization that separates the best-performing brands from everyone else is what many members of the Swiss watch sector are concerned about today. Thankfully, Swiss-made luxury timepieces are becoming increasingly popular among young people. On the other hand, some individuals are purchasing watches solely to resell them at a higher price on the secondary market, which is unhealthy speculation. People who desire these watches very much but can't seem to get their hands on them have expressed a significant amount of frustration about this situation. Emphasis on the significant. More than half of the earnings in the watch industry come from only 3 independent brands: Rolex, Patek Philippe, and Audemars Piguet, aka the Big Three. And as a result, most of the speculation is focused on the most expensive models produced by these companies. This sort of mania has previously afflicted pre-owned versions of specific models, but never before have we seen it have such a profound effect on brand new versions of those same models. The outlook is not as bright for makers of affordable and moderately priced wristwatches. The total number of watches shipped has dropped by half in the last 2 decades, from 60 million in the early 2000s to just 15 million in 2021. Companies who create reasonably priced watches under the Swiss-made designation are feeling the pressure of rising competition from smartwatches and the popularity of non-Swiss fashion labels like Guess, Puma, and Armani among younger purchasers. Here's the thing, folks. Luxury sales are important, but not enough to sustain the watchmaking sector. We believe a solid industrial basis is essential, as economies of scale are required to recover investment expenditures. Rolex and the Swatch Group are 2 examples of successful watchmaking brands that have the resources to improve their production models. Over the past decade, these businesses have either built up their in-house production capacities or acquired subcontractors with a particular focus on those working with mechanical movements and their components. As a result, the labels will have more say over manufacturing. Now, because there's a scarcity of subcontractors, it's difficult for smaller enterprises to find independent suppliers. This makes the situation much more difficult. The success of the Swiss watchmaking industry can be attributed to the vast number of highly trained individuals who are employed within the sector. All of the independent contractors and business owners that contribute to the continued success of this industry are necessary. Concern has been expressed by Swiss watchmakers regarding the near monopoly that a small number of brands currently hold in the market. Even if they only make a few dozen watches per year for rich hobbyists, independent watchmakers benefit from a thriving market. Let's talk about cars for a second. The more similar automobiles become, the more people will covet the uniqueness of a few models. The same applies to wristwatches. Collectors who want a unique timepiece drive innovation in the industry. So while we rejoice that many youngsters are becoming interested in Swiss watches, the question is this: when they become older buyers in the next 10 years, will the Swiss watch trade still have hundreds of brands for them to choose from? Many industry insiders are of the impression that the answer is no, as mergers and the growing influence of the big 3, Rolex, Patek Philippe, and Audemars Piguet, pose a danger to independent producers. While there is the possibility of brands like Richard Mille showing up and shaking the industry, it would be a rarity indeed. Contrary to popular belief, there is no space for everyone. When the market is thriving and the money is pouring, there is room for everyone, but that time is past. Natural selection has been severe, and it's just going to get worse in the next year or 2 years. We must be practical, but that doesn't mean everything is bleak. Or do you think it is? This new trend of uncertainty might not go away for a while, but we do know one thing. There's nothing quite like a mechanical watch.